Do you want to buy a house with as little cash as possible? Well, watch this short video to learn all about seller subsidies. Hi, I'm Blake Davenport with the Davenport Group. I'm a local realtor in the DC metro area, here to share with you short and simple real estate tips. Today we're going to be talking about seller subsidies or closing cost assistance. So what I'm talking about when I say seller subsidy, that is the seller is giving you a lump sum of money at closing to reduce your closing costs and ultimately to reduce the total cash to close that you need to provide when buying a house. It's often referred as a closing assistance from the seller. It really helps reduce a buyer's total cash to close. Why would you do this? Well, it allows a buyer to basically get a refund back from the seller at closing to reduce their total amount of cash to close. Maybe you're looking to buy a house and you don't have as much money or liquid cash as someone else, so you would do this in an instance to reduce the amount of cash that you need. Because when you buy a property, you're going to be paying the down payment and then the closing cost. So the down payment typically ranges anywhere from 3% and above, and the closing costs are around 2 to 2.5% of the house. So just to do some math, if it was a $500,000 property and say you were putting 5% down, that's $25,000, and then the closing costs are going to be about 2.5 at max. That's another 12.5. So altogether, to buy that $500,000 property, you're going to need about $37,500. But say you only have $30,000 to spend. That's where, say, the property's been on the market for a little bit longer, maybe a couple weeks in the DC metro area, which is a long time, and say instead of $500,000, you wanted to make an offer at $490,000. Well, you essentially could offer $500,000, but with $10,000 back at closing. The seller still nets $490,000. It doesn't really make a difference to them. However, you basically take out a loan up to that $500,000 price point, but you're receiving $10,000 back at closing. So you're essentially financing the $10,000 into the loan over the 30 years, but it reduces your total cash to close. So for instance, when I said you needed $37,500, if you got $10,000 back from the seller, you would ultimately only need $27,500. So that sounds great. Why wouldn't you always do that? Well, in a multiple offer situation, it kind of shows that you're not as financially strong as someone who doesn't need to do that. So if it's a multiple offer situation, I wouldn't recommend it, because every single time that I've asked for money back when it was a multiple offer situation is the person lost, just because honestly it shows that you're not as strong financially. So that's why it doesn't happen very often in this area. However, if a property's been on the market for longer and there's no other offers, there's nothing that prevents you from doing it, and it's a typical strategy that I recommend to a lot of people to reduce the amount of cash that they have to bring to closing. I've had people even get a seller subsidy or closing assistance of $20,000. For a VA loan, you can ask for a seller subsidy of up to 6% of the purchase price. You can actually even use this to pay off credit card bills, etc. So it's great if you're a VA buyer. If you're a conventional buyer or non-military, you can basically borrow up to or ask for up to the closing costs. They can give you a closing assistance greater than the closing cost, but the seller is not going to allow you to redeem that at closing. So just be wary. One mistake that a lot of buyers do is they get a closing cost assistance greater than their closing costs are going to be. So never really ask for more than, like, I would say 2% of the sales price, because there might be an issue where there's going to be unused funds that the seller is essentially giving you, but you can't use. And one other thing to note about seller subsidy or closing assistance, one of the reasons why a seller doesn't like it is because the property still has to appraise at the higher price. So in the $500,000 example that I was talking about earlier, even if you were essentially the seller was netting $490,000, but you were offering $500,000 with $10,000 back, the property still has to appraise at that $500,000 price point, because that's what you're getting the loan for minus your down payment. So it's one of the other things why a seller wouldn't like it. But if they only have one offer, they have to consider that offer. So it's definitely a strategy you can do, and it's allowed us to help people get into properties when they didn't have as much money. So just consider that when you're thinking about buying a property, that actually you may not think that we don't have as much saved for a down payment, closing costs. Well, you can ask for money back to kind of reduce those costs. Well, there you have it. Now you know all about seller subsidies and closing assistance. If you have any comments, please drop them below. We'd love to hear from you. Also, click the like icon if you like this video. If you like the real estate content that we produce, click the subscribe button or the bell icon. We'd love for you to follow and be notified of our next video. But thanks again for checking out this real estate tip on seller subsidies. Bye-bye.